Tesla stock has fluctuated between rising and falling. The automaker's trend shares had a 45% decline this year following a near 50% surge in 2021 and a staggering 743% gain in 2020. The market has exerted significant pressure on the stock price, particularly as a number of unrelated variables have contributed to the stock price decline that Tesla has seen. Hi everyone, happy to be back on everything. Tesla and nearly all other tech and growth stocks saw a sharp increase in value on indications of slowing inflation in the consumer price index. Tesla's stock nearly matched Nasdaq's explosive 7.3 rise during that session, but the company hasn't been able to take advantage of the bump because Musk's Twitter saga continues to overshadow the firm's performance and growth story. In the EV sector, Tesla has accomplished a number of incredible feats and is expanding at a rate that many of its rivals find difficult to match. Charlie Munger, a renowned investor, recently expressed his optimism about Tesla as a business and how he believes the automaker is outperforming expectations in an interview with CNBC. What is Charlie's opinion on Tesla? Watch the video to find out, but not before liking, subscribing, and turning on the notification bell to stay informed about all developments regarding Tesla. Recently, Charlie Munger, vice chairman of Berkshire Hathaway, praised Elon Musk's electric vehicle startup, Tesla, describing it as an incredible achievement in the U.S. auto sector. Munger reiterated Tesla's resolute position in the EV industry by saying that he is shocked by the company's success. With a market valuation of more than $600 billion as of January of this year, Tesla has grown to be among the most valuable corporations in the world. Since 2009, 1.91 million Tesla automobiles have been produced. In just the first 2 quarters of 2021, the carmaker produced 386,759 vehicles, and in the third quarter of 2022, it delivered about the same number of vehicles, or 34,000. The carmaker's revenue increased by 55.95% year-over-year to $21.454 billion for the same quarter that ended in September. According to Munger, Tesla's revenue over this period was around $75 billion, representing a 59.8% year-over-year rise. Tesla has significantly advanced humanity, and its CEO, Elon Musk, has accomplished several admirable things that others were unable to. He went on to say that it has been a while since there has been a successful new automaker, and that what Tesla has accomplished in the automotive industry is nothing short of a small miracle. Charlie Munger has a strong history of successful investments. The investing expert forecasted significant turmoil for the investment markets early this year at the Daily Journal's annual meeting. He claimed that even though some people were indulging in deplorable excesses, this posed a threat to the economy. Speaking more about this, Munger said that the extreme short positions that were held at the time in GameStop and the Bitcoin market, together with excessive money throwing by venture capital, were significant contributors to these excesses. Additionally, he clarified that venture capital and other private equity types were oversupplied. Munger continued, "If the government prints too much money, it will eventually cause more trouble than any that has been seen in the past." This is undoubtedly the case today, as prices are rising across a wide range of spending categories and inflation is occurring at an alarming rate globally. According to the 12-month percentage change in the Consumer Price Index, as of October of this year, prices in the United States have climbed by 7.7 compared to October of last year, with inflation on the high side. Most individuals discovered that they spend more on purchasing commodities than they used to. In a recent note about Tesla, the investment company stated that while Musk's ownership of Twitter may affect some consumer sentiments regarding Tesla, any resulting weakness in Tesla shares could present an opportunity for investors. The Fed had recently raised its benchmark interest rate by 0.75 percentage points, which was the third outsized rate increase in a row, bringing the FED rates to 3 to 3.25%. Tesla stock is currently trading below $200, and among a number of other issues, seems to be getting heavier due to the various opinions and disputes surrounding the Twitter acquisition. Morgan Stanley asserts that controversy breeds uncertainty, and that the ability of investors to confidently model the economic outlook for the company's core EV and energy storage businesses, which are supported by a favorable economic backdrop, was one of the key factors contributing to Tesla shares' high valuation status. It further stated that tests of this confidence have been conducted recently and would be conducted through the end of the year, even while it might not be feasible to estimate the effects this might have on Tesla shares. Many investors in the area frequently express concern about it. In terms of auto production, deliveries, earnings, revenue profit margins, and technology, to name a few, Tesla has outstanding fundamentals. The automaker's stock is still below 200 though, and it is unclear when it will be able to reach new highs in the market despite these circumstances. Morgan Stanley stated that these feelings may have an impact on Tesla's demand from customers in the first place. Some customers might not want to be linked to controversy, and this might also have an impact on Tesla's business relationships. Even if Tesla is a very vertically integrated business, it nevertheless depends on a number of business alliances that might not want to be linked to certain degrees of controversy. Investor mood and capital markets participation may also be impacted, as well as the automaker's backing and connections with the government. Close collaboration with overseas partners is necessary for Tesla's industrialization of renewable ecosystems and onshore battery development, particularly with China and the United States. The automotive firm currently funds itself to a considerable extent, but in order to reach the expansion envisaged by its current market valuation of $600 billion, it will need to maintain a strong relationship with the investing community. In addition, the investment company stated that before the year is out, Tesla's stock price would be in the $150 bear market. It stated that there will be a window of opportunity for potential Tesla investors. EV demand is slowing down, especially in China, and possible negative sentiment concerns might force Tesla to test our $150 bear case before the year is up. Morgan Stanley thinks Tesla might keep bringing down the cost of cars in the future. According to the statement, its China team has made comments regarding the recent, notable price reductions in that market. As a result, it anticipates price reductions in Europe when Tesla's Giga Berlin starts to exceed 5,000 units per week in production. Future production cost reductions will be leveraged by Tesla to further reduce car costs. However, this strategy will only be effective if the automaker maintains tight control over supply in order to fulfill the heightened demand brought on by the cheap prices of its electric vehicles. A self-funded top-line grower like Tesla that is in a prime position to profit from re-architecting the U.S. renewable supply chain at scale, according to Morgan Stanley, could trade at an excellent value of roughly 12.5 times EV per earnings before interest taxes, depreciation, and amortization and 23 times PE on its 2025 forecast in its 150 Bearcat stock price. Both in terms of market share and profitability, Tesla is capturing a sizable portion of the rapidly growing UV business. Tesla has previously stated that, while selling for $10,000 or more, the average cost of parts and assembly for one of its cars is approximately $366,000. This difference in cost makes Tesla the most profitable automaker in the world. In that regard, Tesla is also seeing an upsurge in demand and is devising strategies to efficiently meet this demand. The carmaker recently reduced the minimum one-week delivery waiting period for all of its Model 3 and Model Y vehicles. Shorter wait periods have decreased demand for the company's EVs, and longer wait times have been a huge problem for those looking to purchase Tesla vehicles. Might also scale higher in comparable news. When compared to a Japanese manufacturer, Tesla's profit margin per car sold was 8 times higher. Toyota. While Toyota claimed to have had a net profit of $3.15 billion for the same period in 2022, the Japanese automaker delivered 8 times as many automobiles as Tesla did during the same time. Tesla reported a Q3 net profit of $3.29 billion. Therefore, it's clear that Tesla is not only leading the electric vehicle market, but also progressively overtaking all other automakers in terms of global market share. How do you feel about Charlie Munger's claims on Tesla? Please share your thoughts with us below, and don't forget to share your Tesla valuation with us. To find out more about Tesla's recent activities, click the next video that appears on your screen.